Now, we talked about what Anand Mehndra seems to be flagging off in the morning, good news of the day, which is that the auto sector is finally looking up. But SIS continues to remain optimistic about which way the economy is moving. Rituraj Sinha joins us now, Group Managing Director with SIS. Rituraj, good morning. Thank you for joining us at a time when everyone is feeling the pain and there is excruciating pain in the job market. You've gone on record and you've said that you would be hiring 30,000 people across the country next year. Am I getting the number right? 20,000, 30,000 people? Where is this optimism coming from? I'm excited to know.
Well, honestly speaking, I think the first thing to address here, Nikunj, would be that the nature of our services business, it's completely domestic focused. It's completely in the category of essential services. So even if the economic cycles are not peaking, people tend to continue to use their facility management services because you can't do away with hygiene. You couldn't do away with your security guards or CCTV cameras, even if in a downturn situation or a not happy growth environment. So I think it's a very recession resistant demand, and that's been demonstrated quarter on quarter over the last 12 quarters since we listed, and more so in the last 3-4 quarters where India has been facing a little bit of a tough environment. As regards to the jobs specifically, look, I can say that between April and October of this year, on an average, SIS has added 1,800, new jobs each month. So that gives us a run rate of over 20,000, 25,000 range for the full year. So when I was commenting about how it looks, looking forward, I still believe that I don't see any material reason for change to that trend that we witnessed in the first 9 months when the things have been really, really bad.
Simple follow-up question, and the follow-up question is coming from the fact that we are in a very disruptive environment and a lot of traditional services are getting automated or are getting eaten up by AI, artificial intelligence. Is that a potential threat to the kind of services or essential services which you are providing, automation and AI?
Well, it depends how you look at it. We look at it as an opportunity, not a threat, actually. So, I mean, we've been deploying CCTV cameras for the longest time. And we used to have control rooms where people would sit and watch thousands of hours of live footage. That's completely replaced now. Now there's video analytics software. So when we are watching thousands of ATMs on e-surveillance every minute of the day, nobody's actually sitting and watching that. We are using video analytics backed by AI and even some ML to actually address that. So you're absolutely right. Technology will play a big part, and essential services will move hopefully into the essential solutions category. The large difference between services and solutions being that services are manpower intensive, whereas solutions are optimizing use of manpower by using greater degree of technology. So that's already happening, and SIS has been a market leader and a thought leader in that sense, and we don't see that technology intervention to be a risk. We actually see it as a great differentiator that allows us to sort of establish a SIS proposition versus our competitors.
I just want to take a minute, Rituraj, before we continue our discussion with you. Just look at the Ujjivan Small Finance Bank pre-open indicative price, and that itself is indicating a solid gap up move and a hefty premium to its issue price. 58 bucks is what it's indicating right now versus the issue price of 37. So it seems like there's another blockbuster listing awaiting in the pipeline shortly. We'll cut across to that and chat with the Ujjivan management as well. But Rituraj, if we were to really put the outlook that you've painted in numbers, what are we looking at going forward? Are we looking at a 3-4 leap in revenue in the next 5 years in cash logistic vertical? Is that a safe assumption?
Well, what we're looking at, SIS, we broadly maintain a guidance that we will continue to deliver 20% year-on-year growth, a greater than 20% return on equity, and a 50% OCF to EBITDA. That's what we have done in the last 12 quarters since listing. There is nothing for me to change that. And if you just sort of extrapolate that number, I'm sure you can do that for yourself. But I'm not here to give you a 5-year, forecast. I think what we can talk about is, as of right now, basis the order pipeline, I can say that the macro environment is actually improving versus the first half of the year, basis what we've seen since Diwali, then going from bad to worse. So honestly, whether it's our major consumers like banks or auto or IT, even the more traditional sectors, I think demand is sort of coming back. Decisions which were clogged, more of them are being taken, or looks like they will be taken in the next 3 to 6 months. So I think the SIS broad parameters that we've indicated in the market in the past, we look at that being maintained.
This is across segments, Rituraj, just to take forward that point. Would it be across segments, security, cash logistics, and then we'll of course come to the global markets as well?
Yeah, so just to establish the data points, 40% of our revenues comes from security solutions in India. Another 15 to 20% comes from facility management solutions in India. And the remainder comes from SIS international operations, which is roughly 40-odd%. Cash logistics actually does not get consolidated into our reporting because we have a minority holding in the cash joint venture. So when I'm giving you these numbers, these are primarily for security, FM, and the international security piece. As regards to cash logistics, we have seen a tremendous amount of intervention in terms of RBI guidelines for minimum standards in cash logistics operations. Then the Ministry of Home Affairs guidelines for, again, solidifying security standards and risk mitigation in cash logistics operations, which are very, very right, because we know cash logistics companies have 11,000 odd cash vans, but we carry as an industry more than 15,000 crores of currency each day for banking segment. Banks do not own cash vans. The physical currency management is completely outsourced. So there was a need for these regulations. They have come about in the last year and a half. We are in the process of determining the new price points with the banking sector, and hopefully this should get smoothened out in the next 3 to 6 months.
Very simple follow-up question, and last one. How exactly are your deals structured? Do they have inflation which kicks in every year? How often do you have to renegotiate your contracts? And where do you see the contract pricing is headed?
Well, all of our contracts, every single one of our 15,000 plus contracts, irrespective of what customer segment and irrespective of size of customer actually, are based on a cost plus pricing model. So, they have direct linkage to the prevailing minimum wage at that point in time, and they have auto escalation. So we do not actually go back to clients and renegotiate each time the minimum wage changes. You have to understand that India has got 30 states, and they continue to alter the minimum rate of pay every 6 months. So there are too many instances of this happening in India. Many years back, the industry moved to a platform where all contracts are built on pro rata price change. So if the minimum wage changes, or provident fund rate changes, or ESI rate changes, or any statutory change for that matter, they are pro rata passed through to the end user. What we get is a percentage service charge on the cost. So if the minimum wage is 100 rupees, we get a percentage on that. If it becomes 102 rupees next month, we would continue to take a percentage of that, and that's an auto escalation. We do not go back to customers, 15,000 of them, and renegotiate every 6 months. That's not the way the industry is structured.
Well, thank you for joining us. We could have extended our conversation. I would love to understand more about the business and the industry, but thank you very much, and thank you for indicating that at least some parts of the economy are looking up.
Thank you very much.